Let's do this.
Started a family and got me a team. On top of my dreams. Joiner, I know you inspired by me. Like I was inspired by Nelson Mandela. I give him a rose for every endeavor. But shout out
All
to
right.
one of the legends of worship. Muhammad Ali with the work and he was the champ. The greatest he earned it. I love that you think that I'm perfect. But I had many mistakes and nervous. My grandmama thought I was perfect. She always guided me when I was searching. I wouldn't be me if it wasn't for her. If it wasn't for her. I wouldn't be Willie. I couldn't be me if there wasn't no Eddie.
This new Will Smith going off on this song. It's going live, waiting for my special guest. Alexa, stop. Waiting for my special guest to come in today. A little bit about my special guest. I was actually, like most influencers do, all right, let me add him. He has joined Miami. I see you, brother. Let's do it. Miami Invest Club. Let's do this.
What's up?
There you go.
Hey bro, how are you doing today?
Pretty good, man. How you doing today?
I'm good, thank you.
All right. So, we'll kind of wait as more people join, but I'll just give them an introduction how this came about. Like, it's only right that I do a video with you because, yeah, I've been stealing your content. So, like you post some amazing content on dividends, on fundamental analysis, and I've been looking at it for a few days, and I just decided to reach out so we could do this live video and kind of share some of this information with my viewers and your viewers as well. And I'll upload this to my Facebook group as well. But I don't know if you want to just do a brief introduction, promote your page or anything you want to get out the way before we get started.
Yeah, I can say a couple of minutes before people start joining and stuff. So, name is Artem. Page on Instagram is Miami Invest Club. Everything together, no slashes, no nothing like this. Studying finance economics since 2011. Working in this thing since, I guess, I'd say 2014 was my first internship. But it got serious in 2017, I think. And that's it. Like, basically, it was mainly corporate finance, what I was doing all my life. And this personal finance, this investment kind of thing started just my own initiative. I don't know, maybe like half year ago or something like this. But obviously, with the combination of what I was studying, I had some basic already knowledge. So everything what I was learning, everything that I was reading, everything that I was studying, it was just an addition. And now I feel pretty comfortable operating in this field, like giving recommendations mainly to my family and friends. I'm not licensed professional yet, so all these suggestions I'll be giving, it's not relevant. It's just for educational purposes, just in case. Basically, that's it.
Yeah, same here, man. My day job, I'm a project manager, so I deal with a lot of people in finance and accounting. So it's kind of great that you have a corporate financing background. So the transition for you must have been pretty easy, like getting into investing, looking at these balance sheets, income statement sheets, and these cash flows and quarterly reports.
Exactly.
Okay.
This is what helped me. Yes, definitely it helped me.
Okay, that's something I'm trying to improve upon. I have some knowledge, but obviously, any additional information I could get is just great. So today we're going to talk about dividends, but before we get into dividends, today the market is up. Last time I looked, what is it up? It is up, like the S&P is up almost 2%. So how's your portfolio doing today?
If you want, I can check right now. I don't know if it will make me disconnect. You want to check?
Oh, it's not that serious.
I don't know,
but more than likely it went up today, right?
Yes, it's like in 4 or 5% today. I have some risky investments because I'm doing this long term. So basically that's why it's more than S&P 500. I think like 4 or 5% just today, just in this 5 hours.
So that's impressive. Like, you beat the market. I always tell my followers, because I work with a lot of beginners, so I always telling them, like, if you can't beat the market, like it's up 2% today, then you shouldn't be investing in individual stocks. But obviously you're pretty seasoned, know what you're doing. But for beginners, I always tell them to invest in index tracking funds.
Very good strategy. For beginners, I would suggest, 95% of the time, if you're a beginner, invest in ETFs. Basically, you go good to go. the same thing, investing in the same stocks.
Right. So that kind of goes in line with what we're going to talk about, like dividend. So I don't know if you want me to tell them or you don't mind telling like what are dividends? You know, I've explained this so many times. I kind of like to hear somebody else definition.
You can start. I can continue.
Okay.
I'm also very interested in to see what you have to say.
So I always tell my followers dividends are a portion of the profit that companies pay to shareholders. You know,
Yes.
to put it simple. You know, usually when a company gets so big, they run out of ways to grow.
Mm-hmm.
And so to maintain investors or to attract new investors, they actually share their profits with them. That's
Exactly.
my explanation.
Yes. And since my page is more focused on like really beginners, because for
Mhm.
us it may be simple, but there are people who will still not understand like basically what you just said. For me, what I say to my followers and to very, very, very beginners, dividends is something, it's just basically a thank you for the company for buying our stock. This is basically a thank you
Yeah.
for buying a part of us. Here is a little bit money for you. And basically, this is money for doing nothing. This is like as simple as it gets, I guess. I guess everyone who I told this, everyone understood this, which
So
is
now we
basically
know.
it is.
So we know what dividends are. You know, we know
Mm-hmm.
why companies pay dividends, but do all companies pay dividends? In my experience, they don't.
No,
But
of course, no.
yeah. Okay.
Uh,
So how
so
do you go about, you know, choosing your dividend paying stocks? Do you choose dividend stocks with the, you know, highest yields? Do you look at the, what is it, the dividend aristocrats, dividend kings, or what's your process?
So, since we skipped a little bit the previous question, no, not all the companies pay dividends.
Hmm.
Mainly, these are the companies which do not have a lot of technological processes going. Mainly, these are the companies which do not spend too much money on research and development. This is, I guess, one of the biggest criteria to pay dividends, not to spend too much money on research and development. And the reason for this, for example, utilities pay good dividends. I don't know, REITs pay good dividends because they basically do not have too much things to spend on. So they can afford to pay those dividends to attract even more investors. While such companies like Microsoft, Apple, they are big, they are swimming in cash, and you would expect them to share the wealth with everyone, but their dividend yields are like 1 to, I don't know, maximum 3%, which is obviously below market average dividend yield.
Yeah, I actually got my portfolio open right now. I have shares in Microsoft, and they actually
Mm-hmm.
pay 1% compared to
Exactly.
some of the REITs that I have, like HYEM, who pays like 7%, you know,
Exactly.
and actually pay
Exactly.
monthly, you know. So I don't know if people know that you could actually give a dividend, receive a dividend check every month if you stagger those out.
Mm-hmm.
So that's how I have mine staggered out. I have, you know, pretty much my 90% of my portfolio is dividend paying companies, and I like to have, you know, receive a
Mm-hmm.
check every month. I don't know. What's your strategy?
Same for me. I think when I was selecting companies, none of them cut their dividends yet. I'm seeing that Carnival is cutting their dividends. I think they already did. Maybe Southwest Airlines. I'm not sure about those two. But the rest, yes, the rest are paying dividends. I am more or less passive dividend investor, long-term safe investor in dividend companies, long established companies. So this is my strategy.
So I'm
Uh,
glad you said that about like companies cutting dividends or freezing dividends, because I actually have Apple Hospitality, and
mhm,
yeah, their dividend yield is 14%, but they suspended it.
mhm,
So, and I also have Disney. So I don't know if you
mhm,
have any stocks that suspended or, you know, frozen, but do you
mhm.
sell your stocks when they suspend the dividend?
No, no. Like I said, my main two companies that suspended dividends or about to suspend dividends are Southwest Airlines and Carnival Cruise Line. For obvious reasons, they're planning to do these things. But for these companies, I invested mainly because of their potential growth, not because of their dividends.
Okay.
I have good dividend companies like AT&T, Store Capital, Raytheon Technologies. All
Yeah.
these companies, they pay great dividends, very strong companies. But those two companies, I invested them mainly for the purpose of potential growth because now they're so much at discount. And for me, when I was selecting those two companies, very risky companies, I was selecting mainly because of their debt equity ratio and all the ratios related to debt. Because obviously when the companies have no source of income, it all depends how much debt they have and how much cash they have. So basically maybe, just maybe, American Airlines is better than Southwest, but Southwest has less debt. It has better debt to equity ratio. It has more cash. So I selected this company because it has the bigger potential to survive this pandemic. The same thing with the Carnival Cruise Line. So those two companies for me, I expecting them to grow like so much. They were like discounted at like 80, 90% at some point. So this is a huge growth I'm expecting.
I'm glad you said that because I'm guessing you're looking at the fundamentals. Like I haven't invested in Carnival Cruise, but I had a few people reach out and say like, should they invest? And my simple response was, do you think people are going to stop going on cruises forever? If
Exactly,
no,
this
then
is my
yeah, take a chance.
response. Eventually it will resume. Eventually people will start going, traveling and stuff like this. This will resume for sure.
That's cool. I'm glad you did the comparison between American Airlines and Southwest. We probably need to do another video on that, like, how you chose between the two. I know you said you mentioned what debt to
Equity.
Debt to equity, and okay, but I'm pretty sure some other factors that you looked at too before you decided to invest in Southwest.
Yes.
But you like American Airlines too, though, right?
I'm invested in Southwest. American Airlines, it had worse financials for me, so I skipped them.
Yeah. Well, you saw that report where I guess the analyst predicted like one of the major airlines were going to go bankrupt, and everybody kind of assumed it was American Airlines, and American Airlines got all pissed, like, hey, we're not going bankrupt, like, chill out.
I heard about this, but for me, like I said, I selected the company that has the bigger chances to survive through this pandemic, so I don't mind that much, like all these reports and stuff. And today, by the way, Southwest got promoted from rating agency. I'm not sure which one, Moody's or S&P 500. They promoted Southwest from neutral to buy. And the stock is already like plus 11% or something like this.
Damn, that was a nice swing trade. I missed that one. Well, it ain't too late, but yeah, I was doing other stuff. Okay.
They're still cheap. I think they're still cheap.
So, I mean, I know we're not financial advisors, but if someone asked you, like, at the current price, would you buy stock of Southwest? Your answer, yes, no?
Let me see which one, but I think
most likely. Let's do it.
But most likely, I would say yes, because it's still way cheaper than it used to be. Yes, it's pretty good price. Maximum price in 6 months, it was like almost $58 per share. Now it's 32, so it's like basically $26 down, like almost half down, almost like 40% discount or something. So yeah, still attractive.
Do you ever just do the simple math? I know you could look at the the fundamentals, but do you ever just look at like the 52-week history and say, okay, these stocks are only down because of the coronavirus. At the 52-week high was at 80, and now it's trading at like 50. I have strong confidence that it will recover, and I'm not going to go look at all the fundamentals. I'm just going to go in right now.
Yes, of course, it's very interesting to see how much stocks dropped, and this, for me, this is the last, almost one of the last criteria for me to select the stock. Basically, what I was doing, if I have two similar companies from two similar industries, and their fundamentals, financials are almost exactly the same, dividend yields are the same, like, yes, then I would go to the history and see which company dropped the most, and I'll just buy this company, so to have the potential more return and stuff. This is like
glad you said that, because I tell people all the time, like, yeah, you could get as technical and analytical as you want, but sometimes you could just do the simple math, look at the simple numbers, and just make a decision within 5 or 10 minutes. Not always, but sometimes.
Yes, I agree.
So I see one of the viewers, I mean, we could talk about this. He wanted us to discuss Apple. Now, I know Apple doesn't pay any dividends, so it's kind of off topic, but have you had a chance to look at Apple fundamentally, and do you have any thoughts on that?
I think Apple pays dividends. I just got $2 from them like last week.
Oh, they do? I did not know that, because I really don't pay attention to Apple that much, which is kind of bad. I shouldn't be saying that online.
I just got $2.16 from them like last week. Let's see what's the dividend yield, but they do.
Okay.
So the dividend yield of Apple right now is 0.97%, which is absolutely acceptable and expected. But the company is just too good. Like for me, my personal thinking is that there are just two companies, let's say so, three companies in technological world which are definitely worth investing every single day. These are Microsoft, which will always be personal computers, office software, Microsoft Word, Microsoft Excel. This is like the whole financial system of the world is using this. So Microsoft is not going anywhere in the nearest future. Same thing with Apple. This is basically one of the biggest handheld devices, iPads, iPhones, like Macs are not that big, but still, this company is also not going anywhere in the nearest future, 100%. Both of these companies are more than $1 trillion in market capitalization.
I think you're right about that. Like, especially Microsoft, like, that's just one of the stocks I would never sell. It'll probably be passed down to my daughter and her kids. Like, no, we're not selling Microsoft ever.
Never. And the third one from these three is Intel for me. So I selected from these three, I selected Intel and Apple. Intel is basically processors, like the same as AMD, but I think Intel has more potential than AMD. The financials of Intel are way better. And the reason I selected Intel, not Microsoft, even though I was so tempted, is because just Intel's financials are undervalued at this moment. And like Microsoft is great and all, but Intel was just too good to miss.
I hear you. Like, how long does it take you to do your fundamental analysis when you're looking at Intel or Apple or any of your stocks?
Obviously, I compare companies within the same industry. So I guess it's worth mentioning how do I select my companies, first of all. I guess you asked it like a couple of minutes ago or something. Yeah, I select companies. First of all, I just put down in the list all the companies that I know are strong and big ones. The second thing I do is I basically copy the whole list of dividend aristocrats, which is, I think, 66 companies. Like 1-2 weeks ago, there were 66 companies. And then what I do, and then I take the companies from Dow Jones Industrial Index, which is like 30 more companies. Obviously, Dividend Aristocrats and Dow Jones, this will be some similar companies. But as a result of these three actions, I have a list of basically like 80, 90 companies to analyze. I divide them into industry sectors and obviously analyze them with the same industry. Each company literally takes me maybe 3 minutes, no more than 3 minutes to analyze. And this is my initial fundamental analysis. So I analyze like 5-10 companies within the same industry. Takes me maybe, I don't know, 10 minutes maximum. And I have maybe like, let's say, so 5 left. Half of them will be gone because their financials are way too bad. And I have now 5 left. And this is where I do already more detailed and more in-depth analysis, financial analysis, fundamental analysis, to select my main competitors, my 2 best companies.
I'm glad you said 10 minutes because some people think it takes, hours upon hours. They're like, man, I bet you just spend all day doing research and, looking up information. I'm like, no, not really. Not really.
Not at all.
I don't think most people understand. I know you understand this. Most of it is, once you do your research and you pull the trigger, it's just simply waiting. That's
exactly.
Just wait for the wealth, every day, like you said, that $2, I get $2 here, $10 here. And it adds, and obviously when compound interest kick in, things really kick off.
This is the miracle of the world, the
I
financial
know.
world.
Yeah, people don't. I keep telling like you could literally be a millionaire by investing in the same stocks over and over a certain length of time, and just waiting. That's it. That's the secret. Just waiting in compound interest, obviously.
That's, I guess, if you don't mind, good time to promote my own free book.
Yes, promote whatever you want. I was just going to ask you if you had any courses, any books.
Yes. I have my completely free ebook on my Instagram page, link in bio and stuff. And it talks exactly about what you just said. The first, and for me, the most important thing about being a successful investor is the mindset of investor, is the ability to hold it, to not sell it as soon as it drops like 10% and you're like, oh, I better sell it now before it goes even lower. To get rid of this mentality. This whole book, which is like just 45, less than 50 pages, you can definitely finish in 1-2 evenings, is focusing exactly on this part of successful investing journey, your mindset. And good thing about this book is just that it was uploaded, I guess, last Thursday. Now it's Tuesday. It got downloaded already more than 250 times. So people are, looks like, excited about it. Same as me.
I tell you what we should do. I like to offer prizes to some of my followers. So more than likely, it's very strong. Well, yes, I am. I would probably purchase your book and
That's
do a
great.
raffle or a gift to one of my members. And maybe one day next week, or we could do a follow up, and we could actually break down some companies, or go through whatever section or topic in your book, and just break down some companies. So if anybody's watching live, if you have any companies you want us to break down, now would be a perfect time to put it in the comments, or DM yourself, DM me, and hopefully one day in the future we could just get together and start breaking these down, weekly, if that's okay with you. So, all right, we got one comment. If it's a competition to win, I'm game. Yeah, man. So my whole goal is just to empower people. I'm tired of people, not having enough to pay their bills,
Exactly.
struggling with day-to-day life. I'm tired of people putting their money in the bank, thinking that's safe and it's gonna grow, because it doesn't. So that's another way. So my boy Booth, this is a good friend of mine. He wants us to look at Uber. People love Uber. They compare. Uber is making a lot of moves, but I'm not personally invested in Uber, but from what I've heard, it's a good stock. But
okay, so I can do a real life initial analysis. Will take maybe 1-2 minutes of Uber.
well, let's do it. Go ahead and do it.
Okay,
Let's do it.
so yeah, I am on Finance Yahoo. Basically 90% of the time, this is where I get my information from. So first thing what I do is I go to financials, obviously. I look in income statement, and I just look at revenue and net income. For initial analysis, this is more than enough. Of course, many people will say, oh, you're just looking at two things, it's not enough. This is initial analysis. The purpose of this is to see if the company is worth analyzing further, or if it's not even worth your time at all. So basically, Uber. Revenue is increasing. Since 2016 to 17, it increased from 3 billion, I think, 3 million, 7, 11, 14, 14. It was every single year it was increasing. Net income is minus 3 million, minus 4 million, or it is billions, I think. Yes, billions, obviously. Minus 3 billion, minus 4 billion, plus 2 billion, minus 8, minus 10 billion. Not so good. Minus 10 billion net income, while the revenue is just 14.5. Not a good deal. Then I go to balance sheet. Balance sheet, I always analyze annual first of all. Assets are increasing, this is good. Liabilities were decreased from 17 to 18, and a little bit increased from 19 to 19, which is okay. Equity is increased, which is also a good sign. Debt to equity ratio is approximately a little bit more than 1. I would say no, 1.1 or something. Don't want to do math right now, which is also good. Not that much of a debt. The company is not that much leveraged. So now back to statistics. Because of negative net income, impossible to calculate PE ratios, any of them, not trailing, not forward PE ratios, not PG ratio, which approximately estimates how the company is going to grow. And the only thing we can look at right now is price to book ratio, which is 5.24, which is, I would say, a lot. Everything more than 1, everything more than 2 is definitely high enough. And the same thing with enterprise value revenue, which is like 4, which is also too big for me, which basically means that the company is very big, but produces very little revenue based on its size. This is what enterprise value revenue ratio tells us. Obviously, no dividends. And now let's see how the company dropped its price in the last 6 months. We see that the price dropped literally just $5. So my verdict, not worth it. That's it.
There you go,
Done.
Booth. Don't invest in Uber. Do your own research. We always say do your own research, but
Done.
you see how quick that was to do a quick analysis, and that's good that you did that. because I always go to the income statement. I'm looking at the revenue, but obviously I want to see, how much of that you kept. So I'm looking at the
Mm-hmm.
net income. Then I look at the balance sheets and the cash flow. I've been looking at the quarterly, so I'll
Mm-hmm.
probably look at the annual as well. But the rest, when you went back to the statistics and the financial sheets, that's something I need to improve on. So long-term investment for Uber, got two people who said probably not, but that's up to you. You got to do some more research. It might be worth it to you. I don't know your personal goals,
Exactly.
but
It all
that's why I always
depends
tell people.
on your strategy, on your investment horizons, time frames, your risk tolerance. It all depends on those things. If you want to risk trying to get more potential return than the market, yeah, go ahead. The Uber is pretty big company. I don't think Lyft can compare with Uber at least just yet. So yeah, for long term, if you're risky enough, you can try.
Yeah. So yeah, it did drop to 21. Now it's at 35. But I have to do some more research. But now you're probably buying at the top. One of the things we always say, don't buy at the
Mm-hmm.
top. Don't chase the stock. If you would have got
Yeah.
in at 21.50 or around 25, you might have been good. But at 35, I don't know how much room it has to grow. It might could grow some more. I don't know. Probably have to look at it, but never chase the stock.
Mm-hmm. The highest it was ever trading, as far as I see right now, is 46, which is just $12 above what it's right now. So yeah, questionable strategy, questionable investment.
Yeah, if you think it's going to go back to 46, I don't know that percentage. What is that, like 15, 20%? Off the top of my head, I don't know. But that's your potential. That's your potential return. Me personally, like you say, it's a lot more better stocks, ETFs, index funds out there
Mm-hmm.
um, besides Uber. So, but it also depends on your strategy. So, anyway, I like to keep these short and simple. We've been on what? Oh, damn, 26 minutes.
Mm-hmm.
If anybody have any questions, now is the time to ask. I'm gonna try to do these weekly if you're available, just to give out more content. And next time I'll invite you to my Facebook private group as well. And other than that, you got anything you want to wrap up and say? If not, I'm gonna go back and look at my portfolio.
Basically, no, a lot of good things, important things were said. Very productive 30 minutes. Thank you for inviting me to speak. It was a great pleasure participating. And I think on Thursday you are doing with my friend Fuad from My Multivision. Yes,
Yeah,
excited for
that's how
this
I
one.
found you. Yeah, that's how I
Excited
found
for
you.
this one. Excited for this one. Let's see what he has to say. You also going to talk about investments or corporate finance?
So we're probably going to do more corporate finance. I think
Okay.
Thursday we're going to talk about liabilities. Liabilities not only for companies but for personal reasons or business reasons as well. So
Okay.
we
Perfect.
do have a comment. So before we go, from Model
Mm-hmm.
Petite, where do you find a company's balance sheet? That's pretty simple. Um, you can
So
answer it if you don't mind.
yeah, two places. First place is obviously just Google name of the company and then financial statements. It goes directly, like first link on Google will be a company name and then like something like investor relations or something like this. But if you want to find one place where all of these things are located, Yahoo Finance. I would say this is more than enough for initial analysis. If you want to go deeper, you can go deeper and find something else, but Yahoo Finance is what's been working for me and thousands and millions of us. So
Thank you for saying that. I tell everybody, like, everybody uses Yahoo. Why don't you just use Yahoo? Go to
mm-hmm.
Yahoo Finance. If you don't know the ticker, just type in whatever company. Type in Apple
Exactly.
stock, Walmart stock. It'll pop up.
Yes.
Trust me,
Don't
it'll pop up.
don't even need to know the ticker exactly.
Yeah, there you go. All right, well, cool. All right, well, yeah, you're a newbie. Hey, you got to start somewhere. So I advise you to check out my page, check out his page. We'll be going live, once a week on Thursday. Going live again with Multivision. So I'm looking
Mm-hmm.
forward to it. Anyway, I'm gonna sign off once again. Thank you, and I'll
Okay.
definitely be reaching out to you.
Yes. Thanks so much. It was a pleasure. It was an honor. Thank you.
All right, brother. Next
Have a
time.
good day.
All right.
You too.